I have had a lot of people asking me a lot of questions about capital gains, and the most common questions I get is, do I have to pay capital gains even if I use the equity to buy another home? Hey, I'm Rose Gonzalez with the Gonzalez Real Estate Team, and in today's video, we're going to talk about what capital gains is, what exceptions are available, and whether you qualify to use it. Okay, so let's start with what is capital gains? Capital gains is any gains you have when selling a property. So let's say you bought a home in 2017 for $500,000. And with prices soaring in the last couple of years, you can sell it today for $850,000. That's a $350,000 in capital gains. Now the question is, do you have to pay taxes on that $350,000? There are some exceptions that you can use to avoid having to pay capital gains taxes. But in order to use this exception, you would have needed to live in the house for a total of 2 years out of the 5 years. So let's say you lived in the house for 1 year, moved out, and 2 years later came back and lived there for another year. That will qualify you for 2 years. So whatever variation of 2 years where you lived in the home out of the 5 will qualify. If you qualify, tax exemptions are that you can write off up to $250,000 of capital gain as a single person. Now, if you're a married couple, that goes up to $500,000. In our example earlier with gains of $350,000, a single person, you could write off up to $250,000. But you'll need to keep in mind that you will still have to pay on $100,000. There are other write-offs you can use to reduce this amount, like paying realtor commissions, any home improvements you made so you can sell the home, and any other costs associated with selling. Let's break that down. Let's take our gains of $350,000. You are single with an exemption of $250,000. You paid a realtor commission of $42,000. You also had to repair a few things and paint the house, which cost another $12,000. Your total taxable gains will be $45,500. It's really important to understand how capital gains works because it's great to sell a home and get $500,000 to $600,000 in equity and buy a bigger home, but it's really important to know what the tax implications are. Because if you have to pay taxes on $200,000 in gains, how will that impact you? One more thing to note is that you're able to use these tax exemptions every 2 years. So if you sell a home in 2022, you can sell another home and use these tax exemptions in 2024 as long as you've lived in the new home for the 2 years as a primary residence. Now, if you're an investor, this does not apply to you because remember, the home must be a primary residence for 2 years. Investors have different options where they can sell an investment property and reinvest it in another piece of property through a 1031 exchange with its own set of rules. If you want to know more about a 1031 exchange, I would highly recommend talking with your tax advisor. And speaking of tax advisors, this video is just a quick guideline about capital gains taxes because it seems to be a topic that I'm getting asked a lot with how much real estate has gone up in the last couple of years. I am not a tax professional, so I would highly recommend talking to a tax advisor and talking to them in more detail about the tax implications specific to your status. Hey guys, I hope you found this video helpful, and if you have any questions, please feel free to comment below or reach out to me directly. And again, if you haven't subscribed to our channel, make sure to give a little love to that subscribe button, and we'll catch you on the next video. Bye!